Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Indian markets are holding on to gains for the second straight day. The Nifty trades around the 12,200 mark, while the broader markets are underperforming. Hindustan Unilever is the top gainer on the Nifty today, as well as the top point contributor. Wockhardt will transfer 62 products and its manufacturing facility in Baddi to Dr. Reddy's on a slump sale basis, and the stock is trading with losses. And Hindalco Industries is the only Nifty company that will be reporting its December quarter numbers today. Good afternoon, Neeraj. While the frontline indices are holding about to gains, I think broader markets are underperforming today.
Yes, they are. But before we get to the markets, and I think we have a slat of interviews lined up as well. Hindalco numbers on your screen. I just have the net profit number right now, and that is about 1,060 crores. But the stock has just taken a bit of an uptick. We'll wait for the estimates to come out and then try and talk more about this. But do watch out for the Hindalco numbers. They'll be interesting to monitor as well. I think when Novelis came out yesterday, and the sentiment around metals is pretty positive today. Will be interesting to see what Hindalco's operational metrics have looked like in the session. So we'll talk about that in just moments from now. While we wait for that, quickly get the heat map on the Nifty 50 on the screen and show you what's moved and what's not. Well, at the start of the trading day, more gainers than losers, and that's pretty much stayed that way. Just that Yes Bank losses have widened, and IndusInd Bank has narrowed its losses but still stays in the red. SBI, widely touted as one stock that could gain today, is actually down under a bit of pressure today, down about 0.85%. What's doing well is Hindustan Unilever, big gains, 5.5% higher. Kotak Bank about 2.3% higher. JSW, Nestle, Wipro are amongst the stocks that have also done well, and there's some strength in ICICI Bank and Axis Bank. Good going there. Lastly, Reliance Industries is not doing too badly for itself as well, and that is helping the index in a big way. So from amongst the heavyweights, you would have to arguably say that HUL, by virtue of the point contribution or the percentage gains, and Reliance, Infosys as well as Kotak Bank are amongst the ones that would be helping the index stage the kind of moves that it has done today. But Hindalco firmly in focus, up about 0.23%, so no big changes there. So keep that stock at the back of your mind. The interesting bit would be how a broader market's done, because the last few days they've started to underperform the large caps, David.
All right, that's what we've got in terms of the overall market mood. Well, the mid caps and the small caps are really under some pressure. There's a clear underperformance that you're seeing over the last few days of trade, at least the days on which the index is clearly outperformed because of the larger heavyweights like Reliance Industries and the HDFC Twins. Today's session, you've got the gains coming into the likes of a Crompton Greaves Consumer, which is up about 4% Max Financial Services, Future Retail. Remember, retail as a theme is playing out well over the last few trading sessions. That too is up closer to about 2.5%. Indraprastha Gas back in action along with Mahanagar Gas, so ahead of numbers. This entire few months around the Q3 numbers has been extremely active for some of these city gas distributors. Larsen & Toubro Infotech is up about 2%. What's losing out is HEG, a big slump of 12% on the count of very disappointing numbers. EBITDA getting wiped off by more than 90%. That's really not gone down too well, and that's had a reflection on Graphite India as well. That too has dipped about 5.5%. Nalco is down about 2.5% as well. Reported its numbers a few days ago, and that was a disappointment, because of which the last 2 days at least the stock has been on a downward trend. Going on to the small cap space, MMTC is doing well. The stock's up about 10.5%. Balrampur Chini, that's up 7.5%. Remember, yesterday we had some comments coming in from the ISMA chief from the Dubai Sugar Conference, talking about the possibility of India gaining on the back of rising sugar prices in terms of its export at least. India Mart Intermesh is up about 4%. Ircon International, remember its numbers, and on the back of numbers the stock's up about 4%. Canfin Homes is up about 3% as well. Suzlon, Sunfarm Advanced Research, BSC, Rain Industries, Wenky's, and Wockhardt today is down about 3.5%. We got the news about the slump sale to Dr. Reddy's. 62 odd drugs, as well as a part of the unit in Baddi that's going to Dr. Reddy's, and therefore the stock's down about 2.5% to 3%. But interesting to see what's happening in the futures and options space. Namni joins us with that. Namni.
Thanks for that, Davina. The Nifty futures, I guess, once again have turned into discount after trading at a premium for the last two sessions. So let's just pull up the futures. 12,215 for the spot, and actually they're back into the premium, and it's premium is also good. It's expanded from yesterday's closing premium of at least 18 points, so that's not a bad sign at all. Open interest build up of about 4%. You've got Nifty Bank as well, which after a while today crossed its 50 DMA, and it's right now, I guess, just about trading at its 50 DMA. And since yesterday, we are seeing more positions coming up for Nifty Bank. Open interest up about 10%. Volatility index has cooled off for the second straight session as the frontline indices have been inching higher. So 13.6 is a very comfortable level for the bulls. Options data, today is the penultimate day to the weekly options expiry. You've got the 12,150 call, which is shedding open interest. Remember, that's a good sign because the call riders of this strike are now running for cover, indicating maybe the expiry could be above that mark. And you've also got the 12,200 call, which is seen fresh riding in today's session. But 12,100 put, since we are trading above that mark and there is significant amount of riding, almost 14 lakh shares have been added there. In terms of stocks, you've got HUL, your top Nifty gainer due to that Motilal Oswal report. We'll discuss that report in greater details during the show. But I just want to highlight 50% of the quantity traded has been marked for delivery. That's giving you an indication it's more of cash-based buying than any sort of trading in this stock because the open interest is just up about 8%. Siemens is the other one. After yesterday's earnings, I guess brokerages are not too happy. The stock's trading below its 50 and 100-day moving average. Significant OI build-up seen there. And lastly, you've got BHEL, where the stock's at 52-week low. This one too came out with its numbers yesterday, and that's reacting quite sharply on the downside to its numbers. Short position seen on the future side for this one. Pull up Hindalco. Let's check how the stock's reacting. The numbers are flashing there on your screen. I think the EBITDA is down almost 17%, which is coming at 1,036 crore versus our estimate of 1,100 and closer to 1,114 crore. So that's a downtick. Plus EBITDA is below our estimate. At least we'll get you more details on that. Revenues also flashing there on your screen, which are down about 10%.
Number of 1,060 which they're flashing is on a group basis. So we generally, when you're looking at the profit numbers, the 1,060 crores is a full group consolidated profit number. We're looking at the standalone numbers as well as the profit numbers of Hindalco plus Utkal. So that's not the number to probably focus on. You're
Actually, they never give Utkal numbers are still not consolidated with the standalone operations. Of course, you have one angle of Novelis, but they give separate EBITDA, I guess, for Utkal and Hindalco.
It's 193 crores. That's the profit. That number is what you need to focus on, and not 1,060 crores. So that's just a clarification there with regards to the profit number. Watch out for those EBITDA numbers that are there down on your screen. More and more of those numbers will keep coming in. But let's also begin the show with numbers that got reported from InfoEdge. They reported a loss in the third quarter. The loss was made on account of associates and JVS. Margins, however, have improved owing to lower other expenses. Let's discuss the quarter gone by with Mr. Chintan Thakkar. He is the CFO of the company. Mr. Thakkar, thanks very much for taking out the time. Let's talk about InfoEdge's quarter gone by, and give us a rain check on how things stand operationally.
Yeah, so let's talk about the standalone InfoEdge company, which is the four verticals: education, matrimony, real estate, and recruitment. Right? So as a standalone, I think the overall the quarter has been good. The revenues have grown around 14%. The billings are up by about 10%. But when you take vertical by vertical, I think Jeevan Sathi was highlight. It grew about billings grew about 27%. While recruitment was kind of is facing a little bit of slowdown, and it was in high single digit number, 8.5% kind of a growth rate over there. From the operating margin standpoint, I think operating expenses have also gone down, particularly on the little bit on the marketing side. We have been a bit flattish, YOY, and because of that, the margins have gone up. So I think YOY the margins have operating margins have gone up by 27%. So overall, I think it's a great quarter. A little bit mixed because there was a little impact of slowdown on the recruitment billing number. But on the whole, I think the numbers are very encouraging.
Recruitment billings, particularly, Mr. Thakkar, do you feel that you could see growth rates of about 26-27%, which we have seen for InfoEdge in the past, and off late that has started to come off? Do you feel like you could reach those levels again?
Look, I think there is an economy within which we play, right? So we can't be insulated from what's going around us. We have been bucking the trend past 2 or 3 quarters. But at the same time, as I said, that we can't be 100% insulated. So there is a little bit of impact of that. So I think it depends on how the overall market is and how the growth rates are. If we start growing back to a higher GDP growth, and there is no reason why it shouldn't grow to that level, because there's nothing else that has shifted. If you in fact see from the competitive landscape perspective, in fact we would have improved from where we were. So I'm sure that this is a cyclical moment, and maybe this quarter, maybe a quarter after that, or whenever it kind of it comes back, and I'm sure the overall inherent the growth potential is very much intact.
And this is particularly obviously on the bulk of the IT hirings and what's been happening in the BPO industry as a whole. But just let me also talk about the real estate side of the business, and then we'll come to the main topic, which is Zomato and the burn rate there, and the fact that when we recently spoke to you on the acquisition of Uber Eats, you guys were very optimistic that this is going to be the big turn for Zomato as well. But let's talk about the other business verticals first and how they've performed.
Okay. Yep. So real estate, the billings have grown around 11%, which is fairly good given how the overall real estate market seems to be. And I think our marketing spend is kind of flattish, and there's about 2 crore and 2.5 crore kind of a cash burn. So we are kind of a break-even business right now. Chugging along well. Previous quarters were kind of a little better than this, but as I said, that overall environment is kind of sluggish for real estate market. But I think 11% is a decent growth. Yeah, so we are happy with with the numbers that we have got. Education business has been again growing at 11-12%, and it's a break-even business. I think it's a similar kind of a growth rate that we have seen in the past. So I think that's I think that's very steady. As I said, Jeevansathi I think has been kind of we have been investing and we have been pursuing a particular strategy for our growth over there, because we are in that segment we are number 3, right? So we are a challenger brand, and I think our strategy has been working out well. Last year we have kind of been growing a lot more on volume rather than on value. This quarter we have seen a good growth in value as well as volume. So from value standpoint, the billings have grown up by 27%. And that's extremely satisfying growth for us.
Mr. Thakkar, the revenue growth rate, as you yourself said, the last 5 quarters has seen a significant slowdown. So is it only the economy or the high base as well? Or would you reckon that if the economy picks up, the consolidated revenue growth rate number can pick up from where it is right now at the end of quarter 3?
Yeah, no, I'm sure there is a base effect, but that's, we are always talking about YOY growth, so obviously there is some base effect of that. But why the growth rates are kind of little slower? Of course, it's growing, but it's growing a little slower. There is an impact of what's happening out there in the economy, and there is definitely, that's one of the key reasons for the kind of revenue numbers that what you are seeing. If it has to improve from here on, as I said that. The basic value proposition is intact. The competitive landscape, in fact, probably we are improving in each of the verticals. So I'm sure the growth can can go back to what we have seen in the past. Probably even better than that.
Okay, one more question from my end. Different companies do different things. Tough times, you may spend more to gain market share, or you may spend less and improve margins over the course of the next 3 or 4 quarters. If indeed things don't change materially on the economic side, would you spend more to gain market share, or would you try and preserve margins?
Yeah, I think if you really look at our track records, that every time there has been a kind of a bit slowdown, we have actually consolidated our position, and we have kind of always emerged much more stronger. And that is because we continue to invest in what we believe the long-term, the long-term investment that is required in business, right? So even in this quarter, if you really see that our investment, behind, tech, platform, content, in general, around people, even if you look at our headcount, I think all has been growing, right? So we are not slowing down in terms of our investment plan. Yeah, there could be a little bit tweaking around how much you spend in marketing and in branding and all that, in line with how the market is reacting to it. But the underlying the theme for us would be that we will continue to invest. The cyclical changes in the business will happen. The inherent strength of the businesses that we are in, the internet as a channel, I think they are all kind of these are all positive factors for us, and we are here for a very long term. So we would not cut down anything. We would continue to invest behind our people.
Right, Mr. Thakkar, let's talk about Zomato then. And last quarter, you had said that the cash burn had fallen from $45 million in March 2019 to $20 million in September 2019. What's the burn for Zomato in this quarter?
It's kind of trending southwards, and I don't have the actual number, right now, but it's definitely lower than 20. And also, just to add to to our last conversation, that Uber Eats acquisition is kind of going well. A lot of Uber Eats business is also kind of getting translated on the Zomato platform. In fact, whatever we had expected, it's doing a bit better than that. So we are extremely kind of happy with with the past trend in terms of the volume as well as in terms of what the cash burn is. Also, Ant Financials, we announced that Ant Financials have agreed to come and fund more money into the company. So these are all very, very positive trends.
Okay, we'll leave it at that, Mr. Thakkar. Thanks so much for taking the time out and speaking to us, and all the best for the quarters ahead.
Thank you.
That's InfoEdge, and the track record of the company speaks. They've just done so well that this slight miss has been digested. The stock is absolutely flat, currently trading near life highs for itself. The other company that has reported numbers this time in the third quarter is Sheela Foam. It was a strong quarter with profits rising 64% and lower raw material prices aiding the expansion in margins. Let's discuss the quarter gone by with Rahul Gautam, the managing director of Sheela Foam. Good having you, Mr. Gautam. Thanks so much for taking the time out. Hasn't been a bad quarter at all. Usually companies are either circumspect about the quarters to come or a bit circumspect about how the times have been because of the economic slowdown. How is it that you are beating the buck, and what do you think the outlook is like for quarter four or arguably for the next 2 or 3 quarters?
So thank you very much for having me. You've asked so many questions at a stretch that let me begin with the last quarter. So last quarter, I must confess that a little bit of addition is because of our Spanish acquisition, which happened on the 14th of October last year, and that quarter got added. But anyway, that's going to be a part of us as we journey along. But even without the Spanish one, there has been a growth as far as last quarter is concerned. From our markets, we see that the trend is changing a little bit. Whatever has passed as far as this quarter is concerned, I see that trend continuing. It's still a slow one, but it is continuing. And my estimates are that in the quarter one of the next financial year, we should be far better than that of last year. Yeah.
Mr. Gautam, hi, good afternoon. In your press release, you've indicated the average TDI prices, which is a basic raw material for your company. They've come down to 129. That was the average price for last quarter. Quarter two, it was about 133. And if I look at the trend, the TDI prices have been coming down. Can you tell us what are the prices currently, and do you expect this trend to last?
So currently there is another small drop. It is about 4 rupees. So it's down to about 125 rupees. It's already bottomed out. Honestly, if there is any minor 2-3 rupees happening here and there, these are transitional matters and happen sometimes. But I see that it has bottomed out. It should remain here for at least next 2 quarters. It should remain here like this. And because I don't see any dramatic change as far as supply side or the demand side is concerned. Plus this recent coronavirus issue in China. China, which is almost producing about 1/3 of TDI of the world and is also consuming an equivalent quantity, that can change that equation a little bit. Because those materials that are being produced there may not be consumed throughout the world, and therefore there may be a further pressure on the price. But I think it will be around this, just 1 or 2 rupees here and there. That may change.
So from last quarter, from 129, it's come down to 125. Where are you sourcing your TDI from, sir?
So majority of it we do source from the Indian suppliers, from GNFC locally, and which will be more than 60-65%. And the balance we are importing. In fact, on the import side also now there are suppliers who stock and sell here, and therefore, as far as we are concerned, it is almost like a local purchase.
Correct me if I'm wrong, since you mentioned China produces 1/3 of TDI and it consumes as well. Because of whatever is happening due to coronavirus outbreak, and you're sourcing 40% of your TDI requirement, there is no anti-dumping duty, but if that comes about, would that impact you?
So the anti-dumping, the local company GNFC has applied for an anti-dumping duty. It is still in very prelim stages. I would assume it will be a couple of months down the line before anything substantial happens or progresses on that issue. And in any case, whatever those duties are, they are of the order of 10-12%. I mean, it's my assumption that it will eventually get levied is about 10-12 rupees a kilo or something like that. I don't think it will change anything much.
Okay. So suffice to say, since the prices are at where they are, your margins will continue to be in that range of 14 to 15% then, because we have seen margin expansion on year-on-year basis.
That is correct. That it will be of in that range, 14 to 15%. It will remain there.
Okay.
That's right.
Sir, just one more question from my side. What was the volume growth on the mattresses business for the quarter gone by, on year-on-year as well as sequentially?
So the volume growth was reasonably high. It was, if I remember correctly, about 38% in numbers. But at the same time, the average selling price did fall by about 200 rupees. So ASP came down, but the volumes went up. And this is also an indication of this downturn that people are tending to be a little more economic or a little more budgetary in their purchases. Plus the impact of the unorganized sector converting to the organized, and therefore the average selling price is a little bit down.
Would this be a factor of the higher mix of, in the mix, a higher proportion of the lower priced mattresses getting sold, Mr. Gautam? And is this a trend which will only expand in your mix? I mean, that the quantum of the lower MRP mattresses will go up?
Yes, it will definitely go up as a percentage. But I don't see a drop happening on the other side either, which is our efforts to pull the price up and, to sort of premiumize and move in that direction. That effort will continue, but that effort is not giving results as desired. It is happening. If I were to break it up into two segments, one is that this new segment, which is the lower end segment, and the other is the higher end segment. The higher end, the prices have moved up, but the volume and the prices there, that's high. And therefore, average selling price, I don't think will come down anymore, but the volumes in that part will definitely increase.
Okay. Just one more point on the advertisements and promotions, because you spoke about how margins may stay higher at 14-15. I think you logged in a similar number in Q2 as well. Well, analysts who look at the sector suggest that the competition that you have in the organized space is rich, backed with PE funds, and therefore the competitive intensity will continue to remain high. Would that keep a lid on the operational metrics expansion, Mr. Gautam?
No, I don't think so. I think that will continue as it is.
Mr. Gautam, I think the last time we spoke to you, you spoke to us about improving your retail touch points and making sure there is a higher conversion rate of footfalls within each of your stores. How's that been progressing in terms of footfall conversion, and any plans in increasing the number of stores? I think there were 4,000 plus exclusive stores that we spoke about. Is there an addition to that? Do you have like a plan in mind as to how many stores you want to reach by the end of the year?
Yes, ma'am. So that is true that the number of stores are expanding. The rate of growth is not as high as it was, let's say, a year and a half back. But today the number is closer to 4,800, in fact 4,850. And the effort to improve the efficiency of the store by increasing footfalls and the conversion, those are the two basic areas that we are working on, and we will continue to work on that. And more on the conversion part within the store. The footfalls, as we also track the footfalls into the stores, and we have seen that it has been low and has picked up in the recent past, but the conversion still is on the lower side. So if you have about 6 footfalls, the conversion is only about 2, and we intend to work hard on, or actually we are working hard on changing that 2 to 3 or 4, and that would bring about the increase in volumes.
Mr. Gautam, the other point being obviously the extensively competitive industry that this is. The fact that we spoke about this also in the past where, at the entry level mattresses, there is intense competition. So how does one get the stickiness of a customer and get the business from the unorganized market to a player like yourself?
So look, as far as competition is concerned, I don't see any industry where there is no competition,
right, or
there is any less competition. Most of the industries are highly competitive, and more so in the economic downturn, So that competition is there, but the large potential of the unorganized sector, as well as the non-modern mattress market, which one estimates that at upwards of 60%, where people sleep on cotton mats, cotton or daris or chatais or something like that. The conversion happening from there to the modern mattress, which may be both the organized and the unorganized, is bound to happen. As soon as availability is increased, as soon as the knowledge and the information on the products increase, as people are able to experience it, and we see expansion of that happening. Then from the unorganized to the organized, I guess there are 2 players in that part. One is us, make the products more competitive and make them available to the unorganized customers. And the other part is, of course, being played by the government to really push the compliance of GST and ensure that people pay their taxes. And I think that convergence the movement is happening there, and I guess it will take a little more time, will eventually happen.
Okay, Mr. Gautam, healthy competition is always good for the industry. We wish you all the best for the coming quarters. That's the management of Sheela Foam. A decline in TDI prices for the last few quarters is definitely helping the company in order to sustain their margins in that territory of about 14 to 15%. And of course, the Spain subsidiary, as they mentioned, for the first time, their numbers were also incorporated this time around. Let's move on and talk about the stock, which can be arguably called the stock of the day, and that's Hindustan Unilever. And the rise today is basically on back of Motilal Oswal's note, which has come out, where they have mentioned that FMCG major, where it has raised its price target along with its valuation multiples for FY22 as well. On account of that, you are seeing the stock going up by about almost 5% in trade. Just want to take you through what that report entails. They've also highlighted how the company has outperformed its peers, both in terms of earnings and also in stock price appreciation in the last decade. And what were the reasons for the outperformance in last decades? They've highlighted certain reasons there, but before that, I just want to take you through the earnings visibility that they've said. They expect the company that they will clock earnings CAGR in the next 2 years of about 18 to 9%. They also expect the margins to improve in FY21 and FY22 by 90 bips to 50 basis point. And if you look at the last decade performance, HUL has managed to expand their margins by as much as 900 basis point, on back of which they've raised the multiple target to 50 times for FY22 EPS, and they've maintained their rating of buy but increased the target price to 24.90. Remember, as per Bloomberg consensus of all the analysts, the 12-month price target is about 20 to 13, and their target is at about 24.90. 24.19. Let me take you through the CAGR performance of the stock and also of the earnings of last 10 years. If you could just pull up the graphics, last 10 years earnings CAGR has been about 13%. Majority of the growth actually is coming in the last 3 and 5 years. As you can see on your screen, last 3-year earning CAGR has been about 19%. And even if you look at the stock price appreciation, last 3-year CAGR has been 36%, while the 10-year CAGR has been 25%. Now, what were the reasons that have led to this sort of earnings growth in the past? The report highlights these were stringent cost savings measure. Remember, even in a tough environment, company has been able to expand their margins, like the report highlights, in the last decade by about 900 basis points. And of course, they've been focusing on premiumization. If you look at maximum profitability of HUL right now, comes in from the personal care segment, and also best of breed analytics that the company has been deploying, looking at the customer trends, what is selling, what is not selling. That has helped the company as well. What are the basic growth levers going ahead for HUL? Of course, the favorable base. Remember, the volume growth number this year has been in the territory of 4 to 5%. If the rural growth has to pick up, if the economy has to pick up, if it has bottomed out, the company in the next 1 year to 2 years will definitely be benefiting from the lower base that we've seen this year. And of course, continued focus on premiumization and the sort of price increases they've been taking. Even in the last conference call, the company had mentioned they will be looking to increase prices of soap. And of course, the synergies from GSK, let's see if that comes about on 1st April or not. The deal is EPS accretive. The Motilal Oswal note states that almost 10% EPS accretive this deal will be. And also the last factor they've highlighted is the cost saving, and also the crude prices coming off will help the company to expand their margins ahead. And on back of that report, we've seen a big move coming in from a behemoth like HUL. It's trading at its all-time high levels, and as per their price target of 24.90 from current levels, also there is an upside potential of about 14 to 15%.
Well, big move for that. Let's figure out whether this can continue or no. But 111 rupees on that expensive stock is no mean feat. Okay, ABB numbers up on the screen as well. Just before we get into Wockhardt, 80% drop in net profit. Remember, we talked about Honeywell Automation, ABB and Siemens today morning, and talking about how Honeywell is just outperforming, though not a strict comparison, but outperforming its peers. ABB numbers leave a bit to be desired. Revenues as well as profitability are both down in trade. So not a great day for ABB, at least starting off. Well, let's move on. Wockhardt is trading with losses after it completed a deal with Dr. Reddy's on a slump sale basis. Darshan is here to take us through the contours of the deal and the reason for the pressure on the stock. Darshan, good afternoon.
Yeah, good afternoon. First, I'll tell you, what the deal is. Then I'll tell you the impact on Wockhardt and why Wockhardt is down and why what it means for Dr. Reddy. Now they sold part of the domestic formulation business to Dr. Reddy's. The entire deal is worth 1850 crores, out of which 26 vaccines will be transferred along with all the IP, the personnel, and the Buddy manufacturing unit will also be transferred. So it's done at a decent premium. The entire thing was almost 4 times the sale. So that was the entire deal. It's done on a slump sale basis. Now, the key reason why Wockhardt is down, now remember, Wockhardt is struggling significantly because the US market isn't doing well for them, given the fact that most of there are 3 plants under import alert. The other 2 plants that they have are under either a warning letter or an OAI. So there is nothing working them. India was the business that was growing. Now what they've said is, now remember, they have a debt of 2600 crores on the books. Now the 1800 crores, whatever will come in, or a part of it that will come in, will be used to retire debt, and that is something that the management has said. So concerns still remain whether this was an attractive deal done at attractive valuations, and what will be flowed back into the business, because if debt is being retired, business is simply not growing. So that seems to be the concern for Wockhardt, and that's why it's down almost 6%. For Dr. Reddy's, yes, it's a good deal. They're getting it at a good valuation. Remember, 18% of their revenue comes in from the domestic business. So and while there are struggles in the overseas market for most of the companies, Dr. Reddy's managed to do well, but nevertheless they're not getting approvals for key drugs. But the focus on domestic markets it will be a big welcome for the investor community, because the multiple right now that are being given to the pharma companies are much higher. If the focus is more on the domestic side rather than and the international side. So it's a decent acquisition that Dr. Reddy has done. It doesn't need any kind of leverage. They have the balance sheet strength to pull this off. They're getting good products. But for Wockhardt, I think the concern is the fundamentals are still not strong, and if that will be used for retiring the debt, question still remains on what happens to the business, because that simply is not growing at all.
All right, that's Wockhardt there for you. That's down about 6% odd. Thanks, Darshan, for that. Also, remember yesterday we were highlighting how the promoter pledges in Wockhardt have actually gone up significantly from the September quarter to the December quarter, where the promoter pledges from 4% have gone up to 24%. In Wockhardt, but that's a story for another day. The stock today is down about 6.5%. Hindalco's third quarter numbers came in bang in line with estimates as lower alumina costs aided operational performance. Nikki Mirchandani gets us more details on the same. Nikki, over to you.
Well, thanks. Standalone numbers seem to be pretty much in line with what the street was estimating, indicating that the aluminium division has pretty much performed in line with their estimates. But if you look at the standalone plus Utkal division performance, that seems to be a little miss as compared to what the street was estimating, probably because of disappointment or the numbers which are a little lower from the alumina division as a whole. I'm going to address the standalone numbers first, where the revenue is down by 14.3% at a number of around 10,230 crore, which is bang in line with what the consensus estimates was. Net profitability, that has dipped in by 22% at a number of 193 crore as compared to 247 crore. However, we've seen the operational performance of the company being higher by as much as 9.3% year-on-year basis. It's essentially the lower input cost and the reduction in renewable power obligation which has aided the operational performance of the company. However, overall, the realization for the aluminium division as a whole, that remains to be disappointing. If you look at the standalone plus Utkal division performance, the number revenue has come down by 14%, and the operational performance too has taken a hit by as much as 29%. Just giving a separate segment breakup of all the three division EBITDA performance. If you look at the aluminium division separately, it's a 17% downtick there. Copper division, it's a 48% downtick there. It's clearly copper division volumes are low, and the refining charges and the treatment charges which are low are weighing down on the copper division performance as a whole. And overall, the numbers, even if you look at the standalone plus Utkal division, they have come in lower by 29%. That's a 6.57% miss as compared to what the street was estimating. Have a fairly more or less in line set of numbers that Hindalco has reported.
Okay, Nikki, thanks for bringing that review of Hindalco for us. Lower alumina cost has aided the performance this time around, and the stock's not doing too much. Actually, it's just about flattish. I think more or less the numbers were factored in. Remember, Novelis is a bigger factor for Hindalco than the domestic operations. But let's shift focus to the markets now. 12,200 has been maintained as of now. 100-point gain seen for Nifty. Nifty Bank firmly trading around the 50 DMA. What sort of trades then you should take at current levels? Let's go across to our techies. Manav Chopra of Indiabulls Ventures joins us on the show, and we've also got Ruchit Jain of Angel Broking. Good afternoon to both of you gentlemen, and thanks a lot for joining us. Manav, are you taking any fresh bets at current levels?
Yes, absolutely. In fact, we have seen the volatility in the markets go down drastically. In fact, yesterday also we haven't seen any good trending action post the markets opened yesterday. There was more or less a range-bound trading action today. The only positive thing that I'm seeing is that the markets are trying to hold above 12,200 levels, and if we manage to close above this, I sense there would be some sort of short covering that could come into the play in last half an hour, and tomorrow being an expiry, since there was strong call writers that was witnessed at 12,200 and 300 strike, that would come for unwinding. So this is one positive thing that the markets would end and is likely to be witnessed in last half an hour. Specifically for the Bank Nifty, yes, Bank Nifty is also showing that breakout levels. It's nearing to its important levels of 31,550. So once if we close above that, I sense both the Nifty and the Bank Nifty would see a strong trending action coming in the next couple of trading sessions. So In all, it is going to be more or less a stock-specific trading move, but I expect Bank Nifty to see some sort of a good momentum rally towards 31,800 to 32,000 levels.
Okay. Ruchit, Jain is also here with us. Ruchit, what's the call on the index now? It seems like the last 2 days there is much more activity again in those heavy-weighted stocks, which led to the index crossing record highs in the first place. Do you see that they're capable enough to take the Nifty higher?
Yes, I believe that markets are likely to continue this momentum, primarily because if we see after that V-shaped recovery during last week, on Monday's session we had seen some dip, but again that dip was bought into around the support of 12,000 levels. Also, if we look at some of the options data, then 12,200 put now has very good amount of open interest, which indicates that this has now become a very strong support. And on the higher side, 12,270 to 12,300 is where the concentration is there. So I think we would see this higher end of the range getting tested maybe in a day or two. So 12,270 to 12,300 is the range where I think the markets would, where the Nifty would head in maybe next 1 or 2 trading sessions.
Okay. Mayuresh Joshi of William O'Neill India is joining us on the show as well, and we'll get to him in just a bit. Mayuresh, just stay on. We just want to quickly go ahead and take those stock ideas from our technical traders before we come back to you. Ruchit, your stock ideas for the afternoon.
And my first pick was a buy call in Metropolis. I intended to give this around 1780, but in last 5 minutes the stock has rallied from 1780 to 1830, 1840 now. If we get any dip again in the range of 1780 to 1800 range, use that dip as a buying opportunity with stop below 1700 for target of 1920. Primarily the stock has given a breakout from a bullish flag pattern with very good volumes today. Second pick is a buy call in options, which is in Larsen and Toubro. If we look at the sum of the historical data, then 1270, 1260 is the range where the stock has managed to find good support in the recent past as well. Now, after the budget, the stock has already corrected from its recent highs, and now even if you look at options data, then 1300 put option has good amount of open interest built up. So the stock is trading around its support. In spite the stock going below 1300, we are not witnessing any kind of unwinding in that 1300 put. So we are advising to go long on 1300 call now, which is trading around 26 rupees, expecting a pullback move from the support. One can buy with stop below 7 rupees for targets around 55 before expiry.
And Manav, your stock ideas?
Yes, my first buy call is on Castrol Industries. In fact, since quite some time, the stock has been in a downtrend since 2015. If we see the charts, it was in a broader lower tops, lower bottom formations, and I sense now after a good medium-term downtrend, we have seen the first signal of a reversal in the month of Jain, whereby the stock has formed a very strong higher bottom at the levels of 140, 145. There has been a breakout witnessed at least on the weekly charts, which confirms that the short-term bottom is in place and eventually we are likely to move higher. The moving averages and the price with the volume is confirming that for a fresh momentum to be seen into the stock even at the current zone. So it's a buy on dips approach. We recommend a buy with a stop loss of 146 for an upside target of 165. My second buy call is on Birla Corporation. In fact, from the stock after a good 1 year of consolidation has seen a breakout, and post that there has been a sideways consolidation, and the prices are currently consolidating its gains by forming a higher bottom. It has a very strong support on the lower side at 740 on the lower, and looking at the current formation, I expect a bigger trend to emerge from the current levels. Recommend a buy into this with a stop loss of 720 for an upside target of 810.
Okay, those are some stock ideas coming in from our technical analyst. I just want to pull up the city gas distribution companies, pull up MGL as well as IGL. Both of them, I believe, right now are sitting at their day's high. IGL is at 2.5%, and MGL is sitting at 1227. As you can see in the last half an hour or so, I think there is some buying momentum which is kicked in. The stock's up about 4.5%. All right, Mayuresh Joshi is with us. Hi, Mayuresh. Good afternoon. Let me begin with the city distribution companies itself, which have been outperforming in the last 1 year. We've seen the earnings coming by from all of them. Are you bullish on this space? Because we've also got a lot of brokerage notes, Mayuresh, in the last 1 or 2 months stating that the gas demand in India in the next 10 years or something will double. On account of that, are you bullish on any of these companies?
We've remained extremely optimistic, Navneet, on all these companies. And as we mentioned time and again over the past so many months, I think the clean energy perspective that the government is trying to put forth, both in terms of the infrastructure investments, whether it's more gas pipelines, which have got announced in the budget from 16,000 kilometers to 27,000 kilometers. I think everything is being set up to probably take up the gas consumption, which is almost 6% at this point of time, to almost 15%. That's the intent that the government has at this point of time. Having said that, and the kind of volume growth city gas distribution companies have exhibited through their numbers, I think it's a phenomenal effect. The third element, obviously, is the new city gas geographical locations that come up, and all these guys are respectively placed in better geographical areas. And as they start bidding out, and as volumes start coming out, both from the PNG part as well as the CNG part as well, I think it's incremental volumes along with realization growth adds on to the EBITDA per reported FCM, which is obviously going to be better going forward as well. The fourth element is in terms of the costing or the input pricing related to natural gas. And though we've got 4 different hubs that we probably track in terms of the blended gas price at the end of it, the entire sense is natural gas prices inch a bit higher. I think the pass-through that these companies have as the leeway is extremely critical from the operating and the bottom line growth as well. As far as methodology goes, I think all these factors put, I think the cancel methodology perfectly fits city gas distribution companies. I think the earnings growth has accelerated and should remain on a very high note. What they've got in terms of institutional holding remains extremely, extremely strong. And the leadership position of this entire group and the ranking itself, the quadrants they're placed in, look very, very positive as well. So yeah, I think as a space, I've always liked that. I like to view in this space. So I think investors are better off holding these stocks, as our methodology suggests that I think earnings momentum will probably continue for the future.
All right. I think we'll try and patch that line with Mayuresh. It's slightly patchy, but we'll try and get that fixed. In the meantime, let's also take a look at one more stock. That's Honeywell Automation. And this stock has gone from just strength to strength. So a low free float stock. The stock has moved up with regards to the last 1 year's movement. 78%. This year itself, the stocks went up 40%. Since December 2010, the stocks went up 16 times. Obviously, the growth trajectory has been strong. If you take a look at Honeywell Automation's revenue and profit growth figures, just from Q1 of 2018 up until Q3 of 2020, you can actually see the growth graph of the revenue, which started about 656 and now to about 900 odd crores is what they've clocked it in terms of their overall revenues. Profits have grown from 55 odd crores in Q1 of 2018 to about 145 crores in the last quarter reported. So good going. They've got strong return ratios as well. Return on assets has been 13.5%. Return on equity is 22.7%. Return on capital has been 22.8%. So on all those parameters also really working well compared to some of its other peers. But you know, also the fact that you've seen the price move so heavily up. Manav, is there any scope for a further increment in the stock price? Honeywell Automation.
In fact, already the prices have seen a very strong rally, and I sense, you know, most of the oscillators are already in the overbought conditions, and in such a scenario, looking at the current data, there is a chance for a short-term profit booking. I don't see any fresh risk reward maybe for entry even at the current zone, given a chance if there is a correction of another 10 odd percentage, then where there could be some risk reward entry. But on the medium term perspective, 34,000 could be an important support levels, and that could be the zone whereby if there is a correction, one should look to enter at the over levels. The overall trend still remains bullish, but I would want to avoid it for a short term basis.
Okay, that's Honeywell Automation for you, and a couple of other stocks as well which are moving. Remember, Siemens has been reacting to the numbers today, and we have seen some significant short positions coming on the future side. No major recovery coming by. JP Morgan, in fact, has cut down their EPS by almost 6%. But let's talk about certain small cap companies as well. I want to pull up the stock of Neogen Chemicals. Let's see what that's doing. It's been on a roll, at least since the time I'll say it has been listed. It listed last year somewhere. and currently it's at almost life high levels at 485. Let's go across to the management. It is not even if you look at the quarter gone by, they've posted a profit. Profits are, by the way, up 2 times at 8 crore versus 4 crore, which was seen in the corresponding quarter. We're joined by Mr. Harin Kanani, who's the Joint Managing Director of the company, to take us through the highlights of the quarter. Mr. Kanani, good afternoon, and thanks a lot for joining us today on BloombergQuint. Congratulations on good set of numbers. The stock's been doing well since the time it made its debut last year. Take us through the highlights. What stood out in the December quarter?
Yeah, so thank you so much for having me here. We got listed in the month of May, and basically before that we had done some investments and acquired new plants and added capacity. So basically in last 3 quarters, essentially last 4 quarters, we've seen very good positive response from our customers, and the demand has been on very high levels, which was what we had already projected. So the higher capacity, we were able to execute our plans well, and we were able to utilize it at the peak capacities, which is what has given us a growth. Also, I have to also give a kind of a clarification that last year we were in the process. So during the first 6 months of FY19, we were in the process of upgrading this capacity. So that's why kind of the base was also a bit lower. So some of the very high percentage growths which you have seen in the first 6 months and to some extent a bit in this quarter were for the fact that 9 months was when the capacity was coming online. And since Q4 or FY19, we've been running this at full capacity, which is what is been shown in the numbers.
Are you suggesting all your plants are running at 100% capacity right now in terms of utilization levels?
Yeah, so generally in chemical plants, multi-product, 80% is considered as peak utilization. And currently all my organic production capacities are running above 80% utilization. So yes, it's the peak utilization at the organic side. Okay. And I think, in the inorganic also, it has been more or less running at peak utilization. So now our additional capacity has come online in Dahej. We did some initial trials in last quarter, but it's now come fully online, full commercial production, regular commercial production. And we also received the site approval from customers, so we can start commercial dispatches going forward from the Dahej facility.
Right. I remember at the time of the IPO, some expansion plans were going, and as you mentioned, even in Dahej, you were looking to expand capacity. At that time, for organic chemical, you used to manufacture some about 1.3 lakh liters of organic chemical. For inorganic, it was about 12 lakh kg. You can correct me if I'm wrong. What are the current numbers then in terms of capacity?
So in terms of organic capacity is 1.2 lakhs liters of reactor capacity. So that remains still the same. But now it's being used for last 4 quarters. It's been used almost at full level. The inorganic capacity, which was 1.2 million kgs of lithium derivatives, is now double. So that is at 2.4 million kgs. But this is the capacity where it's usually the approval process is a bit longer, and over next 2 or 3 years, we expect even full utilization of the existing inorganic capacity.
Okay, I believe you export nearly 36% as of now, if I look at the revenue breakup.
Yes.
Could you give us a sense, due to coronavirus outbreak, has that benefited company like yours? Are you getting more inquiries with regard to more export orders? Maybe China was exporting to certain countries, and right now due to production shutdown, they're unable to do so. Are you getting any additional export orders due to that?
Not because of coronavirus, but over last 3 to 4 years, there has been, China has been having some of the challenges, and more innovator companies in Europe, Japan and US have been looking very closely at India and wanting to develop credible, reliable, long-term sources in India. So yes, that overall has been the trend, and that is what has been helping us, like in terms of more and more interest. But that is basically more relevant for our next expansion, which is already underway for doubling our organic capacity, which is where these molecules will come online and these businesses will come online. The growth that you've seen has largely come from existing customers' demand and our regular products and some of the new products which we've launched all the time.
Okay, Mr. Kanani, the entire money which was raised in the IPO, I believe of 135 crore, has that been deployed completely?
Yes, that was mainly for repaying the previous term loans that we had taken and for working capital utilization, which basically reduced the debt and allowed us to, continue more expansion for organic facility. So yes, all of that has been already deployed.
So how are you going
and part of the reduction in PAT and that you have seen is also, the improvement in PAT and reduction in the interest rates. Interest cost has come because of the deployment.
Okay, leave us with the guidance then, sir, for FY21 or maybe for the next 2 to 3 years for your shareholders, since you're a newly listed company. What sort of growth levels can they expect from a company like yours?
So FY21, our biggest challenge is that our organic capacity is already running full, and we expect the new organic capacity to come towards the end of FY21. So we have a bit of a challenge in terms of FY21 because we can get some additional business from the inorganic capacity and some by debottlenecking our organic capacity. But we have a better clarity on FY22 because once we have the new capacity installed in FY21, it will be enough for at least a 500 crore overall top line. And so we are targeting, let's say, somewhere between 450 to 500 crore in FY22. We also told in our conference call that a more clearer guidance on FY21 will be able to release by May because we are trying to do several other projects, to see what is the best we can do for FY21.
Okay, sir. We leave it on that note and wishing you all the best for the coming quarters as well. That's the management of Neogen Chemicals. And as you can see, the stock's up in about 9%. For this year, it's gained about 35% thereabouts. I think the issue price was somewhere about 215 and the stock trades at 481. Mayuresh, I don't know if you tracked the company. It was listed last year, but any thoughts if you do? If not, then the entire chemical space, which currently everyone's been talking about due to coronavirus outbreak, there are certain companies which stand to benefit out of that.
So clearly, I think not closely tracking this one, but space, I think, is like this space for the last few months as well. And as the management was clearly pointing out, I think the last few years, specialty chemicals as a whole, I think supply constraint issues in China have clearly diverted a lot of facilities towards India, and those opportunities have probably led to far more export orders coming into their kitty. The second element, obviously, is how they're probably managing the entire specialty portfolio within their basket itself. I think a lot of these specialty chemical companies already have niche products within their portfolios itself, which have a huge addressable market size, both domestically and as well in terms of applications. So it's a diverse of companies that I can probably talk about at this point of time. But again, I think largely Sudarshan Chemicals is something that I still believe can do really well because in terms of their market leadership in pigmentation, largest in India at this point of time. 48% is coming in from the export business as well. It's very stable on that count. So I think the expectations in terms of improvement in ROEs as we map in our systems and our methodology perfectly the bill. From an earnings quadrant where I think the EPS rating and rankings are very, very superior within its peer rank group. ROEs are very well defined and the kind of newness or initiatives that the company has, both in terms of product leadership in India and globally, I think that probably stands out in terms of earnings growth being able to sustain going forward. So yeah, I think it fulfills most of our canceling parameters. So yeah, I think Neogen, good stock, but we'll probably this point of larger institution holding and earnings stability and predictability is something like a chemical for me.
All right, and that's an active space we're going to keep a watch out for. Thank you very much, Mayuresh, for joining us this afternoon. with your thoughts. That's Mayuresh, Joshi. A few other stocks which have been active in the last few days has been Shilpa Medicare, and the stock today is also up about 8.5%, which takes its 7-day tally northwards of 55%. So this is a really active counter, and it's not on small, it's obviously on, it's a thinly traded stock, not very heavily traded. I mean, you've got the maximum volume right now at about 4,85,000 odd shares. But still, it's much higher than the last 20 days average in terms of the overall volumes. Then you've got Parag Milk Foods. Yesterday saw a dip of 16%, fell 16% by the end of it. And today, while it started on a weaker note, it's up about 5.5% right now. So that's 105 on Parag Milk Foods. And then you've got an Ipca Laboratories, which is up 6% today. In the last 7 days, the stock's been up about 10%, including, obviously, today's big move that's come in. Do you track Shilpa Medicare, Manav? The stock's been up 55% in the last 7 days.
Yes, in fact, if we see the chart on a long-term basis for Shilpa Medicare, it was in a structured downtrend, and there has been a very sharp change in trend reversal, and post that series of up move. I believe how many people would have actually caught such kind of a move. It was a total surprise, and it's very difficult to gauge such kind of a momentum coming in stocks at the current levels. Definitely it would be very risky to get fresh trades growing. Yes, there has been a reversal, but the point would be to see in this stock whether such reversals actually hold on, and eventually how much more upside can we see. But the other stock, if I want to look in, would definitely, like you highlighted, was Ipca Laboratories. I think this is one stock which has been on a structural uptrend. The overall structure looks quite well placed, and it's quite established. So any dips into the stock should actually be looked for buying opportunity. In fact, today the stock has also witnessed a fresh breakout on its daily and the weekly charts, and is currently trading above its previous swing high. So I would recommend going long in Ipca Laboratories, even for a trading opportunity. One can place a stop loss below 1280 on the lower side, and eventually trail this for an upside. For a medium term perspective, we can expect targets of close to 1380, and for long term, even 1425 is on cards.
Okay, 1425 for long term. That's the target Manav is putting on Ipca Labs, and he's also suggesting one can look to buy the stock at current levels. All right, let's find out which are the other stocks which are buzzing, or rather, which are those 4 stocks which feature in Sharad Dubey's Fab 4 list today. Let's go across to him. Hi, Sharad. Good afternoon.
Good afternoon, Navneet. The first stock is Tasty by Eatables. The stock is up 20%, is the biggest gainer in the Nifty 500 index, and it also saw its biggest intraday gain in almost 6 weeks. The revenues coming in almost 30% up, and even the net profits have doubled to almost 14 crore rupees. The margins have also seen an expansion, and the company deals in selling prepared foods. Up next is Ipca Labs. As we're discussing, the stock is up almost 6.1%. They're coming out of a strong set of quarterly results, with Indian formulations rising by 25%, and also the exports also rising by almost 16%. Apart from this, the margin expansion is also seen by almost 100 basis points for the company, and the net profit rose by almost 25%. Up next is Aster DM Healthcare, which is also up on results, coming up with a strong set of operational numbers, that going up almost 4.4% up in the day's trade itself. Indices impacted the margins as well, but the net profit did rise by almost 40%. The hospital segment grew by almost 16%, but the clinical pharmacy and your retail pharmacy segment was flat. And the last stock of the day is Afle India, which is up almost 8.7%. It's coming at its lifetime high and seeing its biggest jump in almost 7 weeks. The stock is up almost 150% from its listing price. Back to you.
Okay, Sharad, thanks a lot for bringing those Fab 4 stocks for us. And markets are still holding on to the gains. Can we just pull up the European market indices as well and check how the globe is faring as of now? Remember, I think globally we have started to witness a risk on trade after a bout of risk off trade due to coronavirus outbreak. So as of now, all the 3 key indices, FTSE, 100, CAC, DAX, all 3 of them are sitting with some bit of gains. Let's bring in our next guest on board then. Yogesh Mehta of Yield Maximisers joins us on the show. Hi, Yogesh. Good afternoon. It's been a good rebound, I would call it, in the last 2 sessions for us. So there is a slight bit of our underperformance from the broader markets today, fag end of the earnings season. Any 1 or 2 numbers, Yogesh, which stood out according to you for the December quarter?
Hi, good afternoon. If we talk about the number season so far and any standout number, then I would say the only number which I can recollect is from Bajaj Finance, which has done fantastically well. And still the management have come out today also they have given the guidance for FY20 for AUM growth as well as the PAT growth for at least 20-22%. So that shows us that poise confidence further for the investors, and I will say the book is growing, the PAT is growing, the cross selling is doing wonderfully well for them in the product business. I think lending business is doing fantastically well, and that is one number which has done really very well. And even on the high base, if we see that if there is any disappointment, people and the analysts were worrying about, but this time we have not seen anything in slowdown scenario as well. So that is one, I think Bajaj Finance is the one where it is very good. And the other one is in auto segment would be Bajaj Auto, where we have seen a good set of number. Even in slowdown numbers, the vehicle sales for the quarter was not that disappointed, and the margin has been little better with their export business has done well. So on that front, ROE and ROCE is much better placed and reasonable valuation. And so that gives me that numbers are showing that maybe it would be a sign of bottom. Probably next 1 or 2 quarters we may not see a spike, but yes, this shows that the growth trajectory is poised for on a higher side.
What about Avenue Supermarts, Yogesh? Yesterday was a day that the stock took a breather, and if you were smart enough to get in then, it's today up another 3-4% at 24.83. Do you see the stock heading northwards further from here?
Devina, good afternoon. See, DMart is a stock where QIP was to be announced, and that's how we have seen that many a participant has participated, and 2094 was the price. I would say that for DMart, any price correction is a good opportunity for growth-oriented outlook on the portfolio side. Then this money will have some kind of relaxation on the debt repayment and the further growth and expansion in terms of new stores and further new product pipeline. So all this together, I think the growth will be there for this company. At least it is visible for next 2 years, where 30-32% growth rate with the stability into the margin around 8.5 to 8.8%, this range for FY21 and 22. So this will itself will give 32% jump. No matter, I am not evaluating DMart in terms of P multiple from day one, though I will give a disclaimer, I am holding the stock since IPO as well as on the listing day. So I would say that it has to be a growth oriented stock, and even the number of stores will grow by at least 25-27 stores every year. That will add to the bottom line. So all this put together, the recipe is very much ready for this company for further growth here from in the future as well. So one should hold on with that. There is no impact of slowdown in last 2-3 quarters, where we have seen apart from few of the consumption stock in the retail side, DMart is the one where we have not seen any kind of hiccup for growth. Even in terms of Titan, we have seen some 1 or 2 months of slowdown in terms of jewelry, but this DMart in the grocery pipeline, there is no slowdown at all.
Okay, that's DMart for you, so still going strong. The other one, Yogesh, being SBI Cards, now that it has got the approval for the IPO, the incremental positive for SBI as a major shareholder for SBI Cards, I mean, the expectations are that the valuation of, it'll attract a valuation of about 55 to 60,000 crores. How much of an incremental upside would you peg in for an SBI on the back of the SBI Cards IPO?
Devina, on the back of the envelope, I have not done that calculation so far. But SBI Cards, the way they are divesting their stake by around 3.5 crore shares, and in terms of other private equity players. So all in all, putting together the valuation front, the value unlocking is happening right now for SBI. So probably that will take good care of their kitty for incremental provision coverage ratio will get better. I would say that more or less it is a price in, because everybody was vouching for this IPO since last 1 month or so, and finally now for some reason it has to be done in this financial year, so that they've got a green signal from the all the approval authorities. I would say that this will have a positive impact on the SBI, but overall if we see that the pool and the asset and the NCLT cases all together for SBI is so heavily loaded that this kind of stake sale, and it will not happen every month, this is first time, and then the next would be in the next,
stay on, we just need to cut across to the cabinet briefing.
निर्णय किया है और ये भी एक स्वागत योग्य कदम है, क्योंकि इससे ये तीनों पब्लिक सेक्टर की कंपनियां जिनके पास आज 30% बिजनेस है, वो कंपनियों का कारोबार और कार्यक्षमता से चलेगा, और इसमें और भी आगे जरूरत लगी तो वो सरकार हमेशा इसके लिए तैयार है। एक चौथा, कंपनी के तीन ही अपने यहाँ सार्वजनिक क्षेत्र में, पब्लिक सेक्टर में 3 जनरल इंश्योरेंस कंपनीज है। एक नेशनल जनरल इंश्योरेंस कंपनी, एक ओरिएंटल जनरल इंश्योरेंस कंपनी और यूनाइटेड जनरल इंश्योरेंस कंपनी। तो ये 3 पहले से है और इसलिए इन तीनों को ये हम दे रहे हैं। फिर 5 प्रकार के 5 MOUs को भी मान्यता दी गई है। इसमें 2 बड़े महत्वपूर्ण है। आइसलैंड के साथ हमारा फिशरी के लिए, क्योंकि वो एक देश ऐसा है जिस
Okay, I reckon some amounts being given to the public sector general insurance company. That's what I was able to make out of it. Okay, we thought that there would be something regarding to insurance companies and the limits thereof. That's not the case really. But Yogesh, sorry, you were making your point. I had to come in because it was the minister speaking. Please finish your point.
It was, can we please have the discussion thread connection was in regard we're talking about?
Yeah, no, the cabinet, Yogesh, it's speaking about recapitalization in insurance, and I believe you have some investments in the insurance space as well.
Yeah, but Neeraj, the announcement which have come is in the public sector domain, and vis-a-vis that on the private sector side, private sector players and the companies will not have any domino effect or any retro effect for that, and probably they want to consolidate as they have done for the few of the public sector banks, and similarly they will go for this because this government especially believes that there should not be too much crowd should not be there within the sector, and for that only government companies are competing with each other. The similar we may see in the oil marketing company as well. So it is not going to affect anything on the working or the performance or the functions of any of the private players in the insurance domain.
Okay. Yeah, it won't. I don't think any of the insurers will really go out and sell their stake dramatically to a foreign player. They would want to hold on to their holdings. So this doesn't impact the public sector space in any fashion whatsoever. Okay, Yogesh, you were making that point about any perceived benefits to State Bank of India because of SBI cards. So are you buying a SBI right now?
No need. Particularly for SBI cards benefit ahead of IPO, it will not be prudent enough to buy SBI at this point in time because the rest of the parameters are still on the worry side, that the provision coverage ratio is better, but the slippage ratio and the asset quality both are not so far improving. Those they have been on a stagnant way. So this value unlock from SBI card will help them partially, but yet I would say 1.2, 1.3 times price to book, it is reasonable enough, and probably we may see if there is any re-rating, will not be more than 1.5 times price to book. So I don't foresee that 350, 360 beyond that point SBI price can move in next 2 quarters. So I will not do it for SBI cards. Yes, I will go ahead for a green note on SBI card IPO to apply for SBI card rather than SBI.
All right, that is on SBI and not going in for the holding company, the majority stakeholder, but definitely will go in for the IPO. Time now to also take a check on what dealing rooms are recommending this afternoon. Darshan Mehta is joining us with his channel checks. Good afternoon, Darshan.
Good afternoon, Devina. One of the stocks that's been spoken about is Apollo Hospitals. Remember, the results will come out tomorrow, and the street is anticipating strong set of numbers after the pledge reduction that has happened. They believe that majority of the overhang is not there on the company. So Apollo Hospitals is something that's been spoken about. The other one that dealers talk about is Metropolis Health, again up 8%, post strong numbers. Again, dealers do believe that some of these counters, despite being expensive, the momentum may continue, and even they believe that Metropolis, again, the trend probably will be on the higher side. One counter which is down in trade today, down 6%, is Rain Industries, but dealers indicate that at lower levels some of the HNIs are actively accumulating. Look at the volumes for a counter which is not very active these days. 1.2 million shares have already been traded, so there is accumulation that's happening. So that's been watched out for over the next few days.
Okay, Darshan, thanks a lot for bringing that dealing room check. Just want to pull up a couple of more stocks which are moving around right now. And Godrej Consumer, that's rallied about nearly 4 to 4.5%. Remember, this has been a laggard within the FMCG space. There is maybe some buying interest coming in at lower levels. Now 645 is where it's trading. Pull up the futures as well. Let's check if there are any long positions being taken, or this is just a short covering bounce that we're seeing on Godrej Consumer. In the meanwhile, Ruchit, at current levels of 645, open interest is showing some bit of build-up of about 10%. Would you take a bet on Godrej?
Not really. The stock has been an underperformer in the recent past, so I believe that this is just a pullback move. It could extend towards 660, 662, where the 200-day moving average is placed. But frankly, after 4.5% positive today, the risk-reward ratio is not that favorable to take a long positions for target of 660. Any existing positions can be held for targets of 660, but not recommended to buy fresh over here.
Okay, and the other stock where there's a lot of shorting which has come by today, and that's Siemens. If you could just pull up the futures plate of that as well. We highlighted the stock. It's been trading below its 50 and 100-day moving average, and there is no recovery which is coming from lower levels. It's still sitting with cuts of nearly 5%, 18% build-up for the February futures. Manav, where do you think if somebody shorted the stock of Siemens, should they cover their profits?
See, on the lower side, the stock is likely to test the levels of 1350 and 1360, which coincides with its long-term averages. And looking at the breakdown today, I sense the prices would also breach its recent swing low of 1400. So if 1400 is reached on the lower side, we could see another downside of 4 to 5%. So overall stock looks weak. One can expect lower targets of 1350.
Okay, 1350 on the downside is something Manav will be watching out on Siemens. By the way, HPCL is down about 2.5%. You are seeing some cuts coming in for L&T Finance Holdings as well, which was quite active in yesterday's trade. HPCL is almost a day's low with cuts of 2.5%. L&T Finance Holdings also down. I want to pull up GAIL. Remember, that was yesterday's top gainer, and Nifty gained about 6%. At least till morning, it was down. There's been a recovery for GAIL as well from the lower levels. Yogesh, I'm not too sure if you've been tracking the numbers, but suddenly the stock moved quite sharply in yesterday's session. Petchem business remains weak, but what did you make of the numbers for GAIL? Do you see any sort of bet now? Because in terms of valuations also, I think it's been trading below its historical averages.
Yeah, that's right. The point is correct that it's quoting at a historically low valuation right now. And looking at the business prospect, I don't foresee that there will be anything material change will happen, positive or the negative, for this company over next 3-4 quarters. Nothing is there in the pipeline. But only business outlook with the new capacity expansion may see some kind of a 8% kind of a revenue growth rate for next financial year and the next 2 financial year. But probably we have seen this spike in the price probably because of this dividend yield, which is more than 5%. That might have catched the eyes for HNIs or the financial institutions. And 120 to 115 seems to be a very at the rock bottom price for next 2 quarters, where it will hold on. And probably that might have given some kind of a uptick, or the way we have seen in other PSU companies like NMDC and others. Whenever there is a dividend yield announcement by more than 5%, the stock always catches eyeballs for FIs.
Okay. So few other names. I think ICICI Bank's doing well today. It's up about 2% at 549. So that's not bad going. And another one from the broader market space, which in the last 4 trading sessions has steadily gone up has been Relaxo Footwear, now approaching 800. I think the intraday high was somewhere closer to 803. From there it's come off, but the last 3 or 4 trading sessions, the stock has been moving steadily higher from levels of about 735 to 794 where it's trading at. So that's a 10% move in the last 7 days of trade. Ruchit, do you track Relaxo?
Yes, broadly we have seen that the stock has been moving in a high top, high bottom fashion since last 5 or 6 months itself. We had a breakout in the month of August 2019, post which every declines towards the 20 days exponential moving average has been bought into. The momentum readings are in overbought zone, so no, I won't recommend taking any fresh positions over here. But if any existing long positions are there, then trailing stop loss method is the best way to ride this trend. 760 is the support now, so existing longs can be still held on with stop below 760.
Fantastic performance, 94, 84 or 94% in the last 6 months of trade. So it's really, showed up. And this is pretty similar to what Bata has also been doing. But the full impact of premiumization still for Relaxo has not played out the way it has played out for Bata. So what Bata has capitalized on all this time has been something that, probably Relaxo is behind the curve on, which the management has indicated that they are going to scale up and they are going to start looking at capitalization in the premium market, and premiumization is going to be the theme going forward. So that could open some new avenues for Relaxo Footwear as well. So watch out for that one. That's at about 795. Anything else, Manav, that you're tracking over the last half an hour that seems interesting to you?
Yes, I've been looking at the chart of Adani Enterprises. In fact, this stock too has seen a very good rally in last 1 week, and yesterday the stock did witness a good breakout on its weekly charts, and post that there was a good follow-on move. This stock overall has been in a good structured uptrend, but recently has also witnessed some increase in volatility, and I sense this is due to the range expansion that the stock has witnessed after many months of consolidation. The trend for the stock is overall intact, and I sense this is one stock which could actually be a good compounder stock for years to come, looking at its long-term structure in place. So this is definitely a buy on dips approach. I sense this is one stock one can look to even buy at the current levels and dips towards 125 in case of declines. But on the medium term, long term, I think this is one stock that one can definitely look in for buying for a long-term opportunity.
Okay. Yogesh, any conviction trade from your conviction investment idea rather from a 1 to 2 year perspective, or whatever a longer period of time duration that you have in mind?
Yeah, Devina, for conviction buy on the list is right now what I'm reading through is United Spirits, wherein I believe that with the 22.5, 23% ROE, ROC numbers, and the growth for this company is around 28-30% for next two. They have done in FY20, they will do in 2021 as well as 22. With the premiumization on the cards, the Diageo launching new products into premium segment in India, and the sales is picking up. So I think the consumption demand is improving with at least a higher single digit, but that is on a sustainable basis. Even if I compare with this, and there is no regulation issue like what we have seen in tobacco products like ITC and all are suffering, which is not there in McDowell, and the sales pan India is doing extremely well. So I believe that at 28-30% growth rate for next 2-3 years vicinity, this company is available at around 45 times PE multiple. Even if I have to give as a consumption basket or the average sector PE multiple, then even if it trades at 50 times, there is enough room for upside. Current price is around 690 rupees. So probably 800-850 would be the range for price target, around 850 rupees. One can look at this as an investment from current price and accumulate on decline as well, because the price has moved up post the result 600 odd level to now 690, 15% appreciation.
Okay, well, and it's done well in the last 1 month. The numbers may not be the best, but I think Yogesh's point is that the multiples are not looking that elevated compared to some of the other consumer names, and therefore maybe it warrants a buy. Let's get in closing strategies from our experts, and then we'll probably get a view on United Spirits as well as Metropolis. But first, top closing strategies. Manav, to you, one name which is a good BTST. I would presume you would give a BTST today.
Yes, surely. In fact, the stock from a similar segment that I like to pick is Radico. Basically, we have seen a good breakout today on the charts, and it has, after about 3 days highs which were closely around the levels of 420, it has breached today and it's likely to close above those levels. So looking at the volume confirmation, I sense this stock would see much more room on the upside. It's a buy on dips approach, and we expect the upside target of close to 435. A stop loss of 418 can be placed into this.
What about you, Ruchit? Your top closing strategy, I presume a BTST?
Yes, definitely. I'd recommend going long on Kotak Bank. Primarily, we have seen a 10% rise in open interest in today's session, along with a price up move, which indicates good amount of long positions have been formed in future segment. Also, on the options front, 1680 and 1700 call options have been witnessing unwinding. So I think it's a good candidate for short covering along with the fresh long formations move. So we should see the levels around 1750, 1760 maybe by tomorrow. So at current levels, I would recommend to go long with stop below 1690 for target of 1750.
Okay, so those are some closing ideas coming in from our techies. Yogesh, before we thank you, what would your advice be to shareholders of maybe HUL, Pidilite, or something like Asian Paints? All these consumer-related companies have been trading at their life high levels, and we've seen this sort of move on HUL today. The stock's up. Okay, I think we've lost the connection with him. Apologies for that. But Ruchit, let me come back to you. Would you advise booking profits in HUL if somebody took a long position in the morning?
See, the stock has given a breakout from a bullish flag pattern, and within the FMCG space, if we see the price, the stock has been one of the outperformer. Also, secondly, if you look at volumes today, the volume, in spite of the stock trading at its all-time high, the volumes are quite good, which is indicating that even at current levels, the stock is witnessing buying interest. So I think one should continue to ride this trend until there are signs of reversal. 2200 should be the stop loss on the existing long positions, and one should not be in a hurry to book out longs.
Okay, don't be in a hurry to book out your long position. And Yogesh, would you also share that view? If somebody is a long-term shareholder and it's sitting with good amount of profit in stocks like Asian Paints, or for that matter HUL as well, what should be the strategy now? Stay invested or book profit, start churning money into some other space? Okay, I think there's some problem with our connection with Yogesh. We'll try and touch base back with him. Meanwhile, pull up Interglobe Aviation. The stock's at the highest point of the day. It's up about 4%. Manav, how were the charts looking with today's move? Would you take any bet here?
The prices, in fact, has been quite volatile recently, and we have seen some sort of a short-term base build up around the levels of 1400. So a very strict stop loss can be placed at 1400, and only then one should initiate long positions. This would see a good momentum rally once if it closes above 1450 levels, and the next upside target would be at 1500. So I sense the stock could be in a broader range of 1400 to 1500 levels, and keeping that in place. So 1400 should be a stop loss for any short-term positions, and 1500 one should book profits and reduce their long positions, at least for the near term.
Okay, gentlemen, stay on. Let's start wrapping up the markets for our viewers, and we are ending the day pretty okay. About 12,200 for the Nifty 50, nearly 353 points for the Sensex. The world is doing okay, and therefore we are participating. Let's see how long does this last. The broader end of the spectrum, yesterday was a big bout of underperformance. Today is no different. In fact, 0.25% lower in the session today. So clearly the last few days, the mid caps and the small caps, that outperformance has given way to underperformance. In fact, maybe 5 of the last 7 sessions, we've had the mid caps and the small caps underperform. Navneet will speak about that. Let me talk about the large caps first, though. And what's doing well? HUL up about 5%, Kotak Bank a couple of percentage points. Nestle has had some gains, about 1.7%. Is strength in iShirt today. Thank God for some bulls there. Reliance Industries about 1.5% higher, M&M about 1%, and Hero MotoCorp about 1%. What's not done well? Yes Bank 4% lower in trade. There's weakness in IndusInd Bank today. SBI has looked slightly wobbly. BPCL, IOC, Sun Pharma has also looked weak, and Cipla too looking slightly wobbly in trade. So these are a few names that are looking slightly weak, but underperformance from the mid cap and the small cap space. Now, I know they would be winners, but the trend not the most optimistic.
Absolutely right, Neeraj. I think broader markets in the last few days have been underperforming, but nevertheless on year-to-date basis that outperformance still stands. With regard to today's session, as you can see on your screen, the mid-cap index is closing with cuts of nearly 0.25%, but still there were a lot of gainers as well, and a couple of result reaction. Let me begin with Tasty Bite, a stock which was covered even in our Fab 4 section today. The numbers were good, and as the numbers came in, you saw some buying coming in, and the stock was locked in upper circuit. But just a disclaimer, I don't think it's a very liquid counter as well. Godrej Consumer, the entire FMCG pack was doing well owing to the sort of momentum one saw for HUL, and the laggard Godrej Consumer also moved in today's session, so that's closing with gains about 4 to 5%. Affle India surprises you, I guess, every single day. It was up today as well, so 10 to 10.5% gains coming in there. The city gas distribution companies continue their momentum on the upside. So MGL and IGL, I guess in the last hour of trade, you saw that buying momentum coming back. 2.5% gains coming in for IGL. United Spirits has been trading at its 52-week high levels. After taking a breather in yesterday's trade, this counter is closing almost at the highest level. D-Mart, and after taking a breather yesterday or maybe day before, D-Mart is back in action today, up about 3%. And you had something like Bandhan Bank, which has rallied about 10% in last 4 sessions. There are talks that its weightage in MSCI index could go up because of higher free float, and I think that revision is to take place today as well. On the losing side, Siemens are reacting negatively to the numbers. Brokerages also cutting EPS targets, 4.5% down, significant shorting seen here. BHEL was also down, reacting negatively to the numbers. The stock was down about nearly 4.5 to 5%. HPCL didn't have a good session and reacting up to the numbers, which were clearly a howler this time around from HEG, a cyclical company. The numbers, margins, I think on all parameters, the stock did not do well. Pull up HEG, that's the counter we're talking about. That was down about nearly 10 to 11%. And profit booking kicking in for something like Wockhardt Chemical, and also Spark, which was in focus today, didn't have a great session. No major recovery coming in for Spark as well in today's trade, which is closing with sharp cuts.
Makes you want to think whether that polarization theme once again is starting to play out over the last few days. Nifty and Sensex and the Nifty Bank, all of them have done well. And Nifty closes with gains of about 100 points, while the Sensex is up about 350 points. Nifty Bank contributed its bit. It's been up about 183 points. In terms of individual point contributors, yesterday was the lead taken by Reliance Industries and HDFC Limited, and similar is the case in today's session. Reliance is accompanied by HUL, which is taking the top slot today, along with ICICI Bank and Kotak Mahindra Bank. SBI on the flip side, along with IndusInd Bank, and BPCL is looking weak.
All right, so those are your nifty contributors for the day. Let's also take a look at the market breadth, how the entire listed universe fared for NSE, and in favor of the declines, the ratio seems to be 2:3. Volatility continued to cool off as the frontline indices were up and about. So 13.5. I think for volatility, we're at very, very comfortable levels if we were to scale to those all-time high levels in Nifty again.
And turnover, the last few days have been in the range of 34,000. We're just a smidge higher than that. 35,700 for today, and the NSE F&O turnover is also higher than yesterday. Tomorrow is going to be important because it's going to be the weekly options expiry day. So at that time, you'll see a larger number. But let's get in those quick closing comments from our technical experts. Manav, let's start off with you. What is it that you're going to be watching out for tomorrow's trade?
I think the Nifty index has closed at good levels. It has been closed above 12,200. So I sense tomorrow would be a day where important follow-on moves would be. We'll wait for some more confirmation. The only negative that I've witnessed that the range in the Bank Nifty today and yesterday were very small range, so we need some confirmation coming from the Bank Nifty to have some broader participation. I think this is one thing that we need some confirmation of. There are some enough call writers who are currently standing at 31,700, 31,800 strikes, so that could act as an immediate pressure for the expiry tomorrow. So we need Bank Nifty to see a decisive close above 31,600 levels on the positional basis for some strong momentum rally to go forward. Looking at the broader perspective, I think we are still in a strong trend on the upside. So as long as 31,100 on the Bank Nifty and for the Nifty 12,000 levels hold, one should maintain a buy on dips approach.
Okay, Ruchit, what are your closing thoughts?
Yeah, as of now, the trend still continues to remain positive. One interesting observation in the options front that was seen today for tomorrow's expiry. 12,200 and 12,150 put options have attracted very good amount of open interest today. You can see that 12,200 open interest total now stands around 27.5 lakhs, whereas around 13.5 lakhs open interest fresh addition was seen in 12,150 put as well. On the other side, 12,200, 12,150, 12,100 call options all witnessed unwinding, and the highest OI is now placed around 12,300. So I think tomorrow's expiry we should see the index heading towards this higher end of the range of 12,270 to 12,300.
Okay, gentlemen, we'll leave it at that. Thank you very much for joining us, Manav as well as Ruchit. And with that, it's a wrap here on Countdown. From Neeraj, Naveen, myself and the entire team that's put the show together. Thank you so much for watching.